Day, with Travis. Today is August 6th, and it's Wednesday. Today's a market recap rather than a market opening. Not much was going on. It's kind of hard to see and give a morning update, and then by the end of the day, things blow up, and it's pretty much obsolete what I said in the morning. So it's starting to be more of a recap. Makes sense. Tomorrow there's no real big impactful market news as far as financial reports hitting the markets. But today was negative for bonds because of Freddie Mac's reported losses. It was 3 times the losses they anticipated, and now it's starting to be speculated that the Fed's really going to have to step in and bail out Freddie Mac, which is kind of the sister company of Fannie Mae. And so they had a $800 or $900 million loss in one quarter, and that's pretty significant for, again, a mortgage-backed security-based company. So with those numbers hitting, it caused money to come out of bonds. And actually, the stocks did a pretty good rally today based on, again, oil prices dropping. They're reported both oil and gas reserves are really high right now, like 500,000 barrels more than they anticipated on both levels. And so that gives us more confidence to have oil prices reduced. So we're down to like 118 a barrel now, down one from 145 a month ago. So that's great news. And also there's a 10-year Treasury auction. It's when they auction the 10-year Treasury note on the world economy. So, you know, France can buy it, or Japan, or whoever, or China can buy our bonds or 10-year mortgage or 10-year backed security. And it had a really good auction today. So that reversed some damage. But this morning it opened up. We were down 65 basis points on a mortgage-backed security. So 65 basis points is 5/8% in fee. So on a $300,000 mortgage, we're looking at over nearly $2,000 you'd have to pay more today than yesterday. But we recovered some of that because of the good auction, the 10-year auction, and we ended up for the day only down a quarter in fee. But from yesterday, we had a loss of about a quarter also. So from between the 2 days, yesterday and today, we're off about an eighth worst in mortgage rates. So we're almost hovering between 6.5 and 6 5/8, depending on your credit score on a 30-year mortgage. So about almost the highest we've seen in a while. And then the other issue is the Fed's comments yesterday. They didn't raise rates, as we mentioned yesterday, but the terminology they used kind of implied that they're not going to raise rates even in September at their next meeting. And so what is important to bond traders is that inflation becomes under control, and the way to control inflation is by raising short-term mortgage interest or short-term rates at the Fed's influence, the Fed funds rate. So when they mention that they're not going to raise those rates, that means inflation may even spiral a little bit more out of control. But the Fed bank is in an interesting position right now, because if they raise rates too soon, it could cause, again, this possible growth in the economy right now. But with the jobs report so weak, that's just a really kind of a shot in the gut to raise rates when the economy is struggling. So interesting times as always, like we mentioned, but the Dow ended up being up 41 points at close today, which means they're at 400 for the last 2 days, which is a significant jump, and they certainly needed it from all the losses we've seen day after day. So tomorrow shouldn't be too interesting unless something globally happens. I think there's some stability. We're hitting a level of support now for mortgage-backed securities, so we shouldn't see too much more deterioration in rates. So we should probably, at the rest of the week at least, stay around that 6.5 range for a 30-year fixed. So I hope that's helpful, and we look forward to serving you, and have a great week. Bye.